Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You're listening to the Financial Survival Network. It's Kerry Lutz. We've got John Rubino on with us for our Monday morning discussion. Is the world in a box? John, welcome.
Morning, Kerry.
Yeah, so you wrote this article, The World's in a Box, and what kind of box is it in? It's obviously not one that's gift wrapped, is it?
Yeah, this is an article based on something that Doug Nolan over at Prudent Bear did last Friday night in his credit bubble bulletin, which I like a lot and which everybody should read. But basically, the premise of his article is that we've got basically 2 economies out there. The real economy, which is made up of jobs and manufacturing and government budgets, is in most places around the world in recession right now. Meanwhile, we got the financial markets, which are booming and heading into bubble territory if they're not already there, also around the world. And the prescription for those 2 problems, they're completely different. For global recession, you cut interest rates and you pump up the money supply and government spending. And for financial bubbles, you do the opposite. You decrease the money supply, you raise interest rates to keep the bubbles from growing to the point where they're destabilizing. Now, our problem is that if we fix one of these issues or address one of these issues, that it makes the other infinitely worse and creates a destabilizing situation. So we're in a box now because we've been borrowing so much money for such a long time and pursuing really stupid monetary and fiscal policies in order to address all our debt, that these are our only 2 choices. We have to address either the financial bubbles by tightening, or the slowdown in the real economy by loosening even more and ramping up QE around the world. And either one of those things leads to a situation that is extremely unstable and extremely volatile and extremely dangerous. And that's all that's left. We have only those 2 choices. And so around the world, you're seeing different countries make decisions based on the choices that they're facing that are kind of contradictory. We got the U.S. now actually shrinking the Fed's balance sheet. It actually announced just today that the amount of money that the Fed has pumped into the system is actually a little smaller now than it was in the past few months. So they're pulling money out of the system. In Japan, they're doing the exact opposite. They're pumping huge amounts of new yen into the Japanese economy. And in Europe, they're getting ready to start creating a tidal wave of euros if the central bank and the Germans can work out a compromise that allows them both to be happy. And so the point is that nothing gets fixed now because we've got 2 problems that can't be fixed simultaneously, and we've got the world's governments each trying to fix one or the other of the problems. So we've got a world of chaos out there and no real fix in sight. So the only thing you can say about the world going forward is going to be extremely volatile and less coherent even than it is today.
Yeah, that's hard to believe that it could be worse than it is now. But when you look at things, it makes total sense because, nothing has been fixed. And who was it? Einstein, who said to solve problem, you got to go beyond the problem itself. And, you have to you have to get to a different level, a level above the problem or the thinking that caused the problem in the first place, right? And certainly we have, not to get too metaphysical, mind you, but we certainly haven't gotten out of the thinking that got us into the problem in the first place, right?
Well, yeah. It all goes back to having a fiat currency printing press, which allows governments to basically create as much new currency as they want to do whatever it takes to win the next election. So they don't have to prioritize in that kind of a situation. And because of that, they can borrow as much money as they want to fund whatever they want. And that has led to the box that we're in now, because we've created huge amounts of debt, which really can't be financed anymore. So that is inherently deflationary. And at the same time, we've pumped out huge amounts of new currency in order to try to finance the debt, but it's all flowing into financial assets, which is leading to financial bubbles. At the same time, we've got deflation in the real economy. So you can trace it all back to the fact that we for some reason, didn't consider human nature back in the 1970s when we handed the world's governments basically unlimited printing presses. Humans are inherently corruptible. We're potentially good, but you put us in certain situations when we can get away with stuff, and we will begin to try to get away with stuff. And that's basically what's happened with world's governments. They were put in a situation by, in effect, being handed an unlimited credit card in the form of an unlimited monetary printing press. And ever since that time, they've been becoming more and more corrupt, and the systems that they've been running have basically devolved into dystopias in which debt grows year after year, and that makes it harder and harder to do anything in the real economy, and the financial markets are manipulated to a greater and greater extent, and that's where we are now. Oh, yeah. One stat that just came out this morning that is very interesting, I think, in this context is that emerging market currencies are plunging. And, Russia, obviously, they've got some geopolitical reasons for having the troubles that they're having, but the rest of the emerging markets are also having the same problems. Bloomberg has an index of 20 emerging market currencies, and it's at the lowest level since 2003, and it's down 10% in just the past year. So what that means is that the periphery of the global economy is being destabilized by the stuff that we've talked about today, and that it's possible that that's where the trouble begins. Maybe that's the subprime mortgage market of the coming bust. And so the trouble starts at the periphery and moves inward. We'll see, but I think that's a very reasonable scenario beginning now.
Oh yeah, and these currency collapses, especially Russia, really dangerous. And you got to think, what is Putin going to do about it? Right? It's causing near bankruptcy of many Russian companies, mining companies, and oil companies. So what's Putin going to do about it, right?
There's only so much that Vladimir Putin or anybody who's running an emerging economy can do, because they are so small compared to the developed world's financial system. The U.S. and Japan and Europe and China are gigantic compared to Brazil or Russia or Thailand or whoever. And so these guys are really at the mercy of global hot money flows. And right now the hot money is flowing out. And so that means the local currencies in these emerging countries are really getting whacked. And there's very little they can do about it. They've been basically at the mercy of hot money flows for decades now. When hot money is flowing into someplace like Brazil, then the real soars. And then you get destabilizing effects from having a soaring currency. And then the money flows back out and the currency tanks. And then you get inflation, which is also very destabilizing. So I feel for the developing world, because they don't have control over their monetary destiny. And this is a really good example of what we're seeing right now of the downside of trying to participate in a global financial market that you don't control. It's sort of like what Greece and Spain and Italy are going through in the Eurozone. They're tied to a relatively strong currency that is debilitating for countries that tend to operate with too much debt. Well, the emerging markets are kind of in the same boat because the dollar is so powerful, and they kind of have to dance to its tune. And so what's happening now for these guys is especially scary because a plunging currency makes all the debts that they've taken on in dollar-denominated bonds. A lot of these countries have been borrowing money in dollars in recent years, and that makes those debts extremely hard to manage. So at the same time, you've got inflation because the currency is getting less and less valuable. You've got deflation because these bonds that you've issued or these bank loans that you've taken out in dollars are getting more and more onerous. So it's a vice that is not easy to get out of once the process gets into gear. And so it'll be interesting to see how these emerging markets handle it going forward. All you can say with certainty, again, is that it's going to be chaotic and it won't be pretty.
Yeah, it's not going to be pretty. We agree on that. And yeah, there is a limit to to what you can do with fiat currency when yours is not the reserve currency. And it just increases their anger at the U.S. It's all our fault, right?
Yeah. Okay. Which brings up one thing they can do, which is to start trading in each other's currencies. And you're seeing that all around the world. You're seeing bilateral trade deals be cut between, Brazil and Argentina and India and a lot of its trading partners and China and Russia, where they do a currency swap where they give each other some of the other's currency, and then they use that currency for trade, bypassing the dollar. And so, to the extent that that we continue to behave as badly and to really take advantage of the unlimited credit card that is the world's reserve currency, we're going to see more and more of these bilateral and multilateral trade deals that don't involve the dollar. And at some point, then the dollar stops being viable as a reserve currency, at least from the point of view of trade. It still might be something that people want to keep as savings because it's perceived to be safer than most other currencies, but they won't need dollars for trade to the extent that they do now. And that means that other things being equal, they'll have to dump some dollars in order to load up on these other currencies that they're using for trade. And so that at some point out there reverses the trend in the dollar and causes it to get weaker. And so maybe, at some point we become like Brazil or somebody who sees our currency just plunging, and there's nothing we can do about it because once it starts gaining momentum, we lose the power to control our own financial destiny. So that's out there. There is a currency crisis in the U.S. future, and it could easily be triggered by the dollar getting stronger in the short run. So, let the dollar go up by another 10 or 20%. Let it have another year in 2015 like 2014, and that could be the trigger.
Yeah, it could be and probably will. At some point, we're going to head for this de-dollarized world. I think getting there, though, John, is a lot harder than it's made out to be. It's not just a matter of a bunch of bilateral trade agreements, because actually of where you put this money once you get it, that's the difficult thing, because the markets in other currencies are just not reliable. They're much more difficult. And China, it's going to take quite a while before renminbi, yuan markets are developed enough and other countries trust them enough to actually go to sleep on Friday and wake up Monday and, look at all of their reserves being placed in those markets. So that's what Martin Armstrong says. But hey, we'll talk more about it up next on the Financial Survival Network.
FSN Radio. It's all about what's next.
People have been using gold and silver to protect their wealth for thousands of years. Shouldn't you? That's why I go to Cloud Hard Assets. Tom Cloud has been in the business for 38 years. Call him now at 800-247-2812. Tom's service is outstanding, and you can buy with complete confidence. Order today, and you'll have your metal in your hands in 10 days or less. Tom takes the guesswork out of what to buy, and you'll buy at the lowest possible prices. And as a special to FSN listeners, you'll get free shipping and insurance. So call Tom today at 800-247-2812. That's 800-247-2812, or find him on the web at cloudhardassets.com and tell him Kerry sent you.
The Financial Survival Network. It's all about what's next.
If you just tuned in, we're talking with John Rubino of dollarcollapse.com, co-author of The Money Bubble, and, the whole de-dollarization trend in the world. John, I think you'll agree, is definitely well underway, but it might be too little too late at this point, to avoid the next crash.
Well, it's an ongoing process that has an impact at the margin. For instance, if China and Russia are going to trade bilaterally using their own currencies, then they're still holding a lot of dollars, and they're still accumulating a lot of dollars because they run trade surpluses with the U.S. But they also need to hold each other's currency. And so, maybe the dollar is 60% of China's reserves right now. And say it drops to 50% because they're loading up on Russian rubles and Indian rupee and Brazilian real in order to trade bilaterally with these other countries. That still makes a difference at the margin. And what these guys are doing, besides doing currency swaps with their emerging market trading partners, they're also buying a lot of gold. So gold is becoming the rock solid, risk-free basis of their foreign currency reserves. And if you have a lot of gold, and you have the security of, real money that's been around for 3,000 years as the basis of your reserves, and then you're using other people's currencies to do a lot of trading, the dollar kind of gets squeezed in the middle there. And that's the dynamic in the intermediate term. But I agree with you. In the short run, we've got a flight to quality going on right now where everybody is terrified of what's happening in their own economies and in the countries around them. And so they're going for safety, and they perceive the US dollar to be the safest asset. So, Martin Armstrong has been right about this for the last few years, that the dollar is becoming the only game in town. But that's not a perpetual motion machine, where we create more debt and that makes the dollar actually stronger because everybody wants our debt, and once dollar debt is created, you have to get more dollars. So that actually makes the dollar stronger. Well, that does work in the short run, but that also allows us to accumulate truly insane amounts of debt. As the world starts borrowing money to a greater and greater extent denominated in dollars, that's destabilizing in its own right. And so, it makes the dollar stronger in the short run, but it makes the dollar vastly weaker in the long run. So there's still an end game out there. And you're right that it's taken way longer than it should have because of this, because of the fact that dollar-denominated debt is actually positive for the dollar because people then need to get dollars in order to pay off their debts. That in the last few years has helped the dollar maintain its value and increase its value. But the amount of debt that's being taken on out there is ultimately bad for the value of the dollar and for all other fiat currencies. There's no last man standing here in the world of fiat currencies when things start to fall apart. We're building up so much debt that it's going to be impossible to maintain a solid fiat currency when all the rest are being swept away. We're seeing what happens to Switzerland, for instance, when they had a traditionally rock-solid currency, and everybody wanted to hold Swiss francs a few years ago because it was perceived to be a safe haven. Well, that bid up the value of the Swiss franc and started to eviscerate the country's export industries, and they ended up having to peg their currency to the euro, which is an inherently weak currency. So now they're going to have to suffer through Eurozone levels of inflation going forward once the Eurozone QE really gets going. So if Switzerland can't do it, nobody's going to be able to do it. And the world of fiat currency will come to a very chaotic end at some point, and possibly sooner rather than later. It might be a few years instead of a few decades, because the amount of debt that we're taking on is already unsustainable. We're already, as we started this conversation, we're already seeing things in the global financial markets and the real economy that are mutually contradictory.
Yeah.
And so any attempt to fix one is going to screw up the other. And that's all that's left for these guys. So, in 2015, we're going to see a lot of really inept attempts to fix the unfixable. And at some point, it's going to dawn on everybody that you can't fix what's been broken because there are no tools left with which to fix it. And so at that point, things change. We'll have a phase change in the market psychology, and then all bets are off. And that's definitely coming, and it could come in 2015 because there really is no way for instance, European quantitative easing to fix things, or Japan, doubling the size of the Bank of Japan's balance sheet, or the U.S. continuing to taper and shrink the size of the Fed's balance sheet. None of these things are going to actually fix anything because they're going to cause huge problems on the other side of the ledger. And so 2015 will be when the problems flip for a lot of these countries. Oh, you've got deflation? Okay, well, now you've got inflation because you tried to fix deflation, and people are going to figure out that it doesn't matter what their governments do, that the problems are intractable, and that something bad is going to happen regardless of what the government tries to do to fix the other thing that was happening last year. It's a loss of faith in the system that we will see when everybody figures out that these guys who are in charge now, not only did they create the problems, but they have no idea how to fix them. And then all hell breaks loose, then everything falls apart.
Well, you and I, we've been talking for years already that we know they don't know how to fix them, But
they've they've convinced a lot of people that they do know how to fix things, So it's the question is, when does everybody figure out that the emperor has no clothes, that there are no solutions to the problems that we've created, short of mass debt liquidation via either huge defaults across the world or a currency devaluation, the likes of which we haven't seen, since the 1930s or even Weimar Germany.
Yeah, and Martin Armstrong seems to think that day is coming in, what did he say?
I think it's 2016, right?
Third quarter of 2015. He's seems to be of the belief, Yeah. He thinks it's coming 9 months from now with a mass wave of sovereign defaults.
Yeah, and see, that's the last part of the process. When governments start defaulting, then it's game over. Because corporations can go bankrupt, which we see over and over again, and governments can bail them out. So as long as they've got functioning currencies, they can delay the day of reckoning. But once nobody wants to hold your bonds anymore, that means your currency doesn't work, because your bonds are basically a reflection of the value of your currency. And once your bonds are toast, then you are toast. And third quarter of 2015, that could easily be the time that it happens.
Yeah, well, at some point, it's going to happen. I think we've agreed on that. Your books, everything, the money bubble, and your prior book, how to profit from the coming dollar collapse. Everything's consistent. But the timetable, that's the killer, right?
That has been the big issue. When I started dollarcollapse.com, it was 2004, and I thought it was a 1-year gig. That I would start this site, chronicle the collapse of the global financial system, and then go on to other things. And so the story has become, how have they kept this going? Why are we still here? I've got an article coming out with that title that'll try to trace some of the explanations and the narratives that have allowed governments to keep this crazy system going for a decade beyond when it should have fallen apart. And, that's how they've been able to depress the price of gold and silver, which should have been the things that benefited from all this debt being taken on and all the money creation and everything. So how have they survived as long as they have, and how have gold bugs been as wrong as we've been about the last few years? So these are interesting questions that are going to give us a lot more to talk about in the years ahead.
Yeah, in fact, Martin Armstrong on his blog today has got his main article, Big Bang 2015.75, and says Sovereign Debt Crisis 2015.75, and he's got a few sticks of dynamite with that timer on it, and he's got his own methods of timing cycles. So whether he's right or wrong, I'm not sure, but he certainly could be right, and he's tracing it back to the Great Depression of 29, and before that to the original Great Depression of 1873, which lasted 26 years. So it's going to be interesting, that's for sure. And right now, as we speak, the dollar is up to 89. On that note, we got to go, but find John's work at dollarcollapse.com. Check out his book, The Money Bubble. It's over, that he co-wrote, obviously, with James Turk. It's the link can be found on financialsurvivalnetwork.com. While you're there, sign up for our newsletter. Check out all the hard work that our webmaster, Stefan, puts into it. Got literally hundreds of articles every week dealing with exactly what we're talking about, which is interesting because these are subjects that the mainstream media studiously does their best to avoid for obvious reasons. John, we'll talk to you next Monday.
Thanks, Kerry. See ya.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.